Okay, welcome to the Swing Trading with Cycles channel. We are going to do our update on natural gas today. It is December 23rd. It's a Friday. It is Christmas Eve, right? Like the day before Christmas Eve. So I expect there's incredibly light trading. And so we're going to look at the intraday charts a little bit today. We'll probably keep this actually relatively short. So let's look at the daily charts first. So as I mentioned in previous videos, and if you haven't seen those, please take a look at the link in the description. You definitely want to get up to speed, and also you want to read up on how to categorize price action cycles. So you're essentially categorizing rallies, declines. This whole thing, for instance, is a cycle, right? It lasted 30 days, right? Started on October 24th, or I should say day one was October 25th, and day 30 was December 6th, right? We had a high on day 22. So we rallied for 22 days, and then we declined for about 8 days. And then we started a new sort of cycle, if you will. And there's nothing mystical about these. We're talking about price action. Prices trend. On this channel, we use price action to analyze that trend, right? We're not predicting the future. We're analyzing the present. And so we topped out on day 5, right? So we rallied for 5 days in the same way that this rallied for 22 days. And notice, at one point, it looked like this rally was over. Let's just see what day that is. At one point, it looked like this rally was over on day 10, right? Because we made this high and then we had a swing high. That's how a rally ends, right? That's important to understand. The rally ends with a swing high. It starts with a swing low. It ends with a swing high. This is a swing high because the candle marks the high. And once we go below the low of that candle, we mark a swing high. So we did that here. And then we chopped around for 1, 2, 3, 4, 5 days. This in real time looked like it was heading lower, right? My expectation for this would be something like that, like this. And that's important to note, right? Like in real time, my expectation would have been like that we're chopping like this in order to do this. But we didn't do that. We actually, like this, you can almost think of this as a bear flag that failed, right? We chopped around in the lower end of the range, had a few of these. We tried to go up and just couldn't make it. But then we eventually rallied up. But then we did break this low to make our cycle low on day 30, as I mentioned. And now we're starting a new cycle. So all that to say, this had a top on day 9, but then it rallied to make a top on day 22. So it is possible that we're going to do something like this and then that, right? Like, now, how likely do you think this scenario is, right? I don't think it's very likely, but it's possible. I just want to acknowledge that. Now, that said, we're on day 13. We've had a high on day 5. And so, we talked about this in the previous videos. If we assume, like, just conservatively, we have a 20-day cycle, right? Like, so let's say it's just short, right? So it's not in the 30-day range, because this was a 21-day cycle. So that happens. Whereas this was like a 30-day cycle. Let me just change these colors so you can see that. So we never know exactly how long this cycle is going to be, and it's not as important for us to know that because we're watching the prices in real time. We can set alerts at key price action levels. And so we are, and just to bring us, so that would bring us to a low on, like, early January, right? We're on day 13, so we're getting close to the low. And notice what we're doing today. We're trying to form a little short-term bottom. And so here's another thing to keep in mind is that there's a way that you can interpret this as saying, oh, well, maybe this wasn't our cycle low here on day 30. And maybe we're actually getting our cycle low here, right? Like, imagine if this whole thing is a cycle, right? From this swing low to this swing low instead of from this swing low to this swing low, right? That would be the optimistic way to look at it. And honestly, that's essentially just trying to look for a positive case where there really isn't one, right? Like, because this would be a daily cycle low on day 43, right? Instead of it being a new cycle in day 13. Just, I want you to understand all the kind of scenarios. Now, as I mentioned in previous videos, we're going to get lower highs along the way. That's how price works. That's how price action works. And so this is most likely setting up one of those lower highs. So we do something like this, and then maybe something like this. But you can see this level becoming resistance. So what's the high on this candle? $5.65. So you want to watch that level to the upside. Do we even make it back up there before we go down and make another low? And maybe we even get another bounce before that low, and it's like something like that, right? But you don't, again, I keep saying, you be careful not to get sucked into these lower highs. Now let's zoom into the lower time frame price action, the hourly chart. This is your 15-minute. Let's level it up to the hourly. Look at that. So just be clear, it's trying to print a swing low right now, right? It's trying to make that a swing low. How does that become a swing low? Well, I'm glad you asked. By going above the high of that candle, right? The same way a swing high is formed when you go below the low of a candle that forms a high. A swing low, exactly the opposite. The bullish version is so a swing high is how a downtrend ends. A swing high is how a downtrend ends. A swing low is how an uptrend begins, right? So the uptrend begins with a swing high, a swing low, and it ends with a swing high. So by going, and this is your hourly candle, by going above $4.97, and right now what is our current price? We're at $5.14. We made a swing low. So this big candle here, and it's about 11 o'clock. It's the 11 a.m. hour. So this is your 10 o'clock candle. And right now, this is just an inside candle. So we need to get outside of the range of this candle, right? Sorry to draw all these lines. So this candle here, the 10 a.m. candle, has a high at $5.24 and a low at $4.96, which is essentially that breakout point to make this a swing low. And so what you want to see is that we continue to make higher swing lows, right? You get that, right? It's like an uptrend makes higher lows. Well, guess what? Those higher lows are swing lows, right? That's how it works, right? These become swing lows along the way. And this is your hourly chart. And so that means the swing low happened on a lower time frame. That's it right there. I don't want to belabor the point here, folks, but I just want everyone to kind of understand how this works. It's not magic. And this is the whole point of, we're not predicting the future. We're just analyzing the present with great precision is the way I kind of think about it. So this is your 15-minute candle that's causing that hourly swing low that we have in place. Again, and remember, the hourly swing low was in place above $4.95. The 15-minute candle, let's see here. What's the high from this candle? $4.95. I think that's the same level as the hourly. No, it's a couple of cents lower, right? So the hourly is about $4.98 is your swing low level on the hourly. And your swing low level on the 15-minute chart, this candle is $4.95 thereabouts. So 2 cents lower. And that's kind of the idea. I kind of say zooming into lower time frames is almost like a time machine, right? You're like able to, like, if you're going to get a bullish outcome on an hourly chart, it has to happen on the 15-minute chart first. And it has to happen on the 5-minute chart before that. Again, see, this is the 5-minute swing low that created that 15-minute swing low. And the high here is the same, $5.95. So this big 5-minute candle is really kind of dominating that 15-minute range. Let's get crazy. What if we zoomed into the 1-minute chart? Boom. So we have a swing low that happened at exactly 9:01. And it took a while. Like, we actually consolidated at the lower end of the range here. And again, if you're following, this is a bit of a bear flag, right? So we kind of bear flagged a little bit, but it's just a 1-minute chart, so a lot less significant. Came up here, made a higher low, another higher low. So this is a little bit of a rangy situation, and then we really start getting the upside here. So I hope you're seeing that. Like, all these 1-minute candles fit inside those 15-minute, 5-minute candles, inside the 15-minute candles, the 1-hour candles. What if we just kind of got really crazy? Yeah. This is your 15-second candle, right? And as we said, it happened at 9:01. And so it looks like we got that low within the first 15 seconds of 9:01, right? It's this candle right here. Now, this is obviously very chaotic action. Here, each candle is 15 seconds, right? And this could be useful. This can be useful to see structures building in real time because you can see more of a trend, right? Like you can see these. Like this is again, this is still more of a range, even down to the 15-second chart. But sometimes on a higher time frame, what looks like just two big candles, if the more you zoom in, you can start to see the structure. Like you see this higher low, higher low, higher low, higher low, and now we're starting to break down. This is your little 15-second swing high. Not to belabor the point, right? Look at that, boom. That's a 50. So as we talk about multiple time frame analysis, this is your little rally on a 15-second time frame. This is that rally breaking down. This is it trying to recover, and so that's what's building that wick on the hourly chart, right? So right there. And on the daily chart, you can see the wick is pretty pronounced. It was a pretty nice hammer candle. I'll delete this so it's easier to see. It was a pretty nice hammer candle not too long ago, but then that pullback on the 15-second chart, which caused the pullback on all the other charts, has created this upper wick, and obviously we'll see where we close. Do we regain that? Always important to know where a candle opened. Why? Because above that price is red, or excuse me, above that price it's green. Below that price it's red, which is to say, it tells you, am I moving in the right direction? Am I higher than the opening price, higher than where I started? So the opening price here is $5.09 thereabouts. We'll call it spot 093, right? And so we have to stay above that or we go green, right? Because we did start green. Again, candle with a long lower wick always means it was green, but it had a rally on a lower time frame that caused it to go red by going back above the opening price. So that's really micro, getting into the details on the hourly chart and the intraday. And I'll just call out here, this has a double bottom look to it, does it not? Now, again, you want to always look at the bullish case and the bearish case for every chart structure. The bullish case is, okay, maybe this is a double bottom. The bearish case is this thing just rolled over on this chart. On this week. We created a swing high below $6.14 thereabouts. This candle marks the most recent swing high. Now, to be clear, like that is below this swing high, right? So we're making lower highs, the same way that we need to make higher lows in an uptrend. So if you want to kind of cling to hope, you can say, oh, well, we kind of bounced right around here, right around this level. That's somewhat promising. So where did we get to? So we got to $4.82. We got to 4.825. So that's about 7 cents higher than what I was expecting we would go, $4.75. Yet again, remember, we're only on day 13 of the daily cycle, so there's plenty more time to decline. And so I suspect we will, like this tells me it's more likely now that we're going to undercut the 475 level because this is just a pause, right? Price can't go down in a straight line. So that's my expectation. I could be wrong. And if I am, we will see that on the chart and we can react accordingly. The other thing to note is this yellow line is a 200-week moving average. It's always a 200-week moving average on these charts. And so notice we last time, we emerged above the 200-week moving average around April 2021. So, it's been a nice rally on the weekly time frame above that. And so I wouldn't be surprised if this thing ends with us touching that moving average. And as I've said, my expectation is $3.60 at some point in early Q1 2023. So I think that's ultimately where we're going. I don't know if we get there in this weekly cycle. Maybe we get a bigger bounce, up here, and then we kind of cascade lower. And maybe in that case, that actually takes us closer to $3 versus the $3.60 level. But that's how you want to kind of think about it. And as we get ready to close out the month, you also want to just be aware of where are we likely to close and therefore where are we likely to open the next candle. And so right now we're going to open most likely near the lows. Or excuse me, we're set up to close closer to the lows, which would mean our January monthly candle is more likely to be something like that, right? Now, we do have this little upper wick. So we'd have to make a low below that 482 level, obviously. Let's say we continue to rally for the next few days. That sets us up to have, an inside candle start for January, right? So something like that, right? Where We're above the low, but also way below the high. And again, I hope you're following. What is that in another way of thinking about that? It's essentially a bear flag, right? It's consolidation at the lower end of the range. So we'll continue to watch this. As I said, it's Friday, so we're going to be closing out the week. I'll definitely put an update out, see how we close, especially if something crazy happens in the next 4 or 5 hours. I'll do that on Twitter. If you're not following on Twitter, definitely take a look at the link in the description. I post there frequently as things happen kind of in real time. So again, I just implore people, don't get hurt out there. Be careful not chasing lower highs. This looks like a juicy little bottom right here, but remember, we are only about halfway through the daily cycle, and so it's more likely than not that we're just setting up a lower high here before lower lows, undercutting that 475 level. 360 is a magnet at this point, and it's really just a question of how quickly do we get there and do we undercut once we do. So we will leave it at that for our natural gas update again here on December 23rd. We'll do more updates next week as we start trading. Again, it'll probably be light volume between Christmas and New Year's. But thank you for watching and happy holidays.